started? Welcome, hi everybody. It's great to be in Anaheim despite the not so lovely weather, but we're making up for it inside of these conference halls with the lively discussion. Some discussions sunnier than others, but I do want to give a big shout out to the Climate Action Reserve, Carr, Jenny, the team, who work so hard every year to pull this together and to really pull all of us together. The numbers are mind-blowing this year in terms of the number of the delegates that we have. And I would actually, before we get into the discussion, just a quick show of hands out there. How many of you have been in carbon markets? And if you left and came back, that's allowed. Have been in carbon markets for more than 10 years? What about more than 15? More than 20? Some OGs, all right, I like that, okay. So it's great to have that knowledge, right, in the room, that experience that we've lived through. Some call it the carbon market 1.0 era, 2.0 era, 3.0, I don't know exactly where we are right now, but it certainly has always been an evolving space. I'm Katie Sullivan, Managing Director at IETA, the International Emissions Trading Association. We represent over 300 members now globally. They have assets, they have exposure, they have workforces across all different sectors, all different regions, and it never gets boring, always fascinating. Always lots of interesting opportunities, but also a lot of challenges. And I think when you've been involved in this space for long enough, some of the challenges that we see now more, which we'll talk about in a moment with my amazing panelists, some of the challenges we see cropping up now are getting more airtime. They're very real challenges, right? Sometimes though, they're challenges and you're like, have whiplash, like, deja vu, have we already been there? Didn't we already solve that, a few years back, a decade back? This is a market on turbocharge. There's a lot of new players, and that's government, and it's corporate, and it's other stakeholders. We are in a really, really exciting moment in time with these carbon markets as they evolve. But I think it's important to take stock about what, again, some of these real and perceived challenges are that are maybe holding that market back from scaling and attaining the promise, the potential, the reductions, right, that we need to achieve in order to reach our Paris targets. So with that, I cannot think of a better panelist. Business, all IETA members. That's a plug. And I think collectively, I was doing the math. We all started when we were really young, okay? Just to be clear. Collectively, we're about 70, 80 years in this space, okay? So I'm joined by Bill Flederbach, familiar face to many people, President, CEO of ClimeCo. We have John Melby, President, CEO of Xpansiv. Barbara Harrison, Vice President, Offsets and Emerging at Chevron, New Energies. Probably the newer.
I do not add much to that 80 tally.
Make us look younger. And last but not least, we have Keegan, Eisenstadt, Global Director, Nature-Based Solutions, South Pole. And we're gonna get this thing started, only 60 minutes. I really wanna make sure that we have time at the end for questions from the audience. So Bill, let's go to you first. And like I said, you've been around 20 plus years in this space. You were involved in Kyoto, US, certainly, CAR, the voluntary space, across all sorts of project types. So my first question is just that world, that discussion, the debate around reductions, avoidance, removals, right? I think we all appreciate it's kind of an all hands on deck kind of thing, but there are some really special, unique considerations related to this, and especially when you're a project developer or advising clients on having more of a harmonized, right, or diversified portfolio. So just that issue, challenge, but also how to potentially overcome it.
Great. Thanks, Katie, and we were very thankful to have you as our moderator. So, and thanks a lot for Climate Action Reserve. You're going to hear that we partner with the Climate Action Reserve for 13, 14 years. I think we've been in business at ClimeCo, close to 15 years. So I really want to thank also my panelists in the Platinum sponsorships. I think it's just our way to support Climate Action Reserve. Last night at one of the kickoffs, I was just like drinking from a fire hose when I was listening to all the creative ideas of all the members that were at the event last night, and that's what this is all about, is making impact. So I want to thank everybody, and I'm excited to talk about this because at ClimeCo we talk a lot about harmonization. Who can argue about diversity, whether or not it's in your team or whether or not it's in your project investments, looking around the globe. But diversity is really important. We call it a harmonized approach. And more recently, I had read a UN article in thinking about some of the data as I was going to come out in front of the team today. And one of the things that struck me is that the UN said we have aggressive 2030 goals. In order to meet those 2030 goals, those interim goals, approximately 1/3 of those reductions are going to have to come from nature-based solutions or removals. And that leaves the other massive 2/3. Well, where's that 2/3 going to come from? And I think this leverages also Craig's discussion that we need urgency now. Those 2/3 are, we can approach those today with avoidance-based projects. So again, I think when I start to think about ClimeCo's investments, I almost think uniquely it mirrors that kind of 2/3 avoidance, 1/3 removals. And I want to stress the importance of that balance. When we started the firm, it was all about avoidance. I was, to Katie's point, I was globetrotting around the world under clean development mechanisms and identified technologies that we could bring to the North American market before there was any price signal. Xpansiv wasn't here. John wasn't here to help me with liquidity and price discovery. But we had a technology that we could bring into the US market to abate nitrous oxide at fertilizer production plants or nitric acid production plants. And that was core to us. But in order to do that, we had to work with the Climate Action Reserve to first, how's the methodology? What's the methodology look like? How are we going to develop that methodology? But then we also needed price discovery. We knew how to build these technologies. Our customers weren't going to go down this path. They weren't regulated by EPA. There was no federal cap and trade. They weren't going to invest this capital. But we needed to understand the marginal cost of abatement. And then we had to go out to the market and say, is the market willing to pay at that price or greater so we could make this system work? And that's what we were able to do. So that was really the foundation from an avoidance standpoint. If I fast forward into some of the creativity that we've done on avoidance, again, tackling what is being emitted now, if we have the opportunity to stop the molecule before it goes into the atmosphere, why not focus on that? While we're also focused on drawing down the molecule once it's in the atmosphere. That harmonization is important. More recently, over the last couple of years, we created an adipic acid protocol. Sounds pretty technical, adipic acid. It's not, if you think about nylon 6,6, if you drove here today, it was right in front of you. It was in your airbag. If you have an electric car, a lot of the components are performance plastics to lighten that vehicle. That's nylon 6,6, that's adipic acid. So we partnered with Ascend Performance Materials and the Climate Action Reserve to create an adipic acid protocol. And it took a couple years. It doesn't usually take this long. I think it took about 18 months to get this protocol across, but it was an important one. But during that time, we were designing the systems, and now it's fully implemented, and that project removes approximately 6 to 8 million tons a year. It was the largest point source of CO2 in North America, and together we targeted it. That's what we needed to do now. And now we're taking that into green cement, working with cement. I heard this earlier today, like 20 years ago. I think there was a lot of discussions around secondary cementitious material and looking at alternatives to cement. Now we're creating a protocol to create scale in cement. We're working across the globe in decarbonizing shipping fleets as well. So you can see all the attention of avoidance, and then when we go over to the removal side, that balance that we're looking for. One of our areas of focus has always been afforestation. In fact, I'm sitting on my panel here with Barbara, who participates with us, and we partnered with Restore the Earth in Louisiana. And our first project was planting 4,000 acres of ball cypress trees. Wow, I never thought I would own so many seedlings. That's planted. It has incredible water quality benefits, species benefits, and also drawdown benefits. And then Chevron came in as our partner, and now they're the steward of that 4,000 acres. We're working with Barbara, and we work with Chevron to oversee that asset. And now currently ClimeCo is investing in another 10,000 acres because we didn't have enough on. So now we're planting more ball cypress. That would kind of give you an idea of some of the focus on removals. We take that into mangroves as well and other project types. So it's an important focus of ours.
Yeah. Thank you, Bill, for getting us started. And great stories, so much history, rich history. How many folks now are at ClimeCo?
We have about 85, but I think we're going to be 100 at the end of this month.
Yeah,
so.
that's right. So, and I say that because, John, we were talking about Xpansiv, and it seems like every week there's a new big announcement related to Xpansiv and the Xpansiv family. Now, you've also been involved in this space for many, many years, including APX, right? And so what you've seen around like the Xpansiv journey, the role that Xpansiv is playing in addressing some of these challenges, as Bill mentioned, you go to you for the transparency and the price discovery and all these things that it comes up more and more, especially, with the voluntary market discussions that are occurring. So why don't you tell us just a bit more about Xpansiv, just again, the recent growth, right, and some of the products and the notable things that you're doing currently, but also just the role that, given your perch, I should say, how the challenges are being kind of overcome and what you're dealing with.
Great, thank you. It's great to be here. As you mentioned, I've been around the space for a while. I think I was at the first NACW. I've been involved with the space with APX when I was there. Xpansiv is a little different than everyone else on the panel here in the fact that we develop market infrastructure. So our goal is to help these markets scale, develop the systems that are behind it, sort of the plumbing, if you will, behind these markets. So what we've done is come together. We built the company up, brought Xpansiv together in 2019, but it's really a couple of companies that existed beforehand. So most recently, we announced the acquisition and completed the acquisition of APX, which is the registry infrastructure provider for the majority of the voluntary carbon market. So we see that infrastructure as sort of the key component, working with our standards partners and helping them provide the technology they need, the solutions they need, the operations they need to help scale these markets. And then along the way, we operate also the largest spot exchange in the world for carbon offsets. So that's an area I'll talk about in a second. The price signals come out of that marketplace. So we've been operating that for a long time. We were working in the voluntary carbon market when most people didn't really care about the voluntary carbon market. And it's really great to see how it's scaled. I'll share some stats in a moment. And then also across that, we've developed a portfolio management tool that lets people work between the registries. So if someone logs into one of the standards, they can then look at their positions across, and that really has enabled both the over-the-counter markets to scale as well as the exchange-traded products. So those are the kind of the key assets that we've brought together to build Xpansiv. We've grown quite a bit in the last 3 years, which has been a great run, and thanks to all of you out there for being our customers. It's been a great ride. Again, our role is really to build the market infrastructure. So as we look at what's happened in the last in 2022, especially the second half of 2022, there's been a lot of volatility in the markets. We've seen things move around. If you think about what we provide, one of the key components is we have a spot exchange. That spot exchange lets people see prices across a number of assets, so someone can look and see what was the last trade of a cook stove project in Ghana or a forestry project in South America. Anywhere along the way, you can see those projects by project basis on our platform. But we also then created a standardized set of products, and it was something that was really important to the industry, and that was the GEO suite, the Global Emissions Offset. And that really came about from our partnership with the airlines. When they came up with CORSIA, we had worked there, and then were selected by IATA, the International Airlines Transportation Association, to develop a market for the airlines to participate in. And along the way, the CORSIA process was developed, and we saw that a lot of customers were looking to buy CORSIA-eligible products, people that were even outside the airlines, because it became a standard. And that we developed the GEO suite, which is a subset of CORSIA, and that became the first standardized contract, really, in the carbon space. And then a little bit later, we developed the NGO, which is a nature-based version of that product. And those have really traded quite well, and they've helped scale the market and ultimately futures contracts have been developed off those. So for us, we look at what we provide to the marketplace is hopefully to help scale, bring the things that are in other asset classes, the infrastructure, the experience in those markets, the partnerships, so that we were able to help scale those markets. The price signals from the spot exchange are really key when people look at their projects. But then the standardized contracts, the GEO and NGO, help look at forward curves. So you can look at what might a project be valued at in the future. And that has enabled forward contracts to be indexed off of it. And then ultimately futures contracts. Those futures contracts have really grown. I'll give you a couple pieces of scale. The current open interest, which is the amount of contracts that have not gone to delivery in that marketplace, is 30 million tons. That's about exactly the same as where the EU ETS or the European model was 1 year in. So about the same trajectory. I mean, we don't know where it goes from there, but those tools are really kind of become key. And then we're already seeing people trade NGO plus or NGO minus. It's really been kind of a key component. So we're here to try to help create price transparency, confidence, and really the infrastructure. And I just close one last piece on that. We announced last week that we were making an EIN, which is an environmental instrument number, which is something that we've used in our infrastructure on that portfolio management tool that has literally transacted billions of assets across it. We made that public, put that IP out there, the technology out there, and that's something that's been used in a lot of other financial markets. People that have been in the financial space may be familiar with a CUSIP. It looks like a CUSIP. Or if you think about another industry that Bill brought up, the car industry, a VIN, it's the number that you have on there. And so the idea with that was to really push that out to the marketplace to help it scale, help other technology providers develop products in the back office and make it a lot easier to ensure the integrity and growth of the market.
Excellent. Thank you so much, John. Yeah, like I said, there's a lot of announcements and stuff being pumped out. And I appreciate that the theme of this discussion is supposed to be just the challenges. And we're kind of getting right into, okay, there are some solutions to that. We will get into some more gnarly technical word challenges in a moment. But I think it is really important to see and appreciate the perspectives across all the panelists. So, project developer, the infrastructure provider right there. So Chevron, obviously major energy industry across the world, some ambitious targets. Mm-hmm. And Barbara, you came on board about 18 months ago. Yep. To this brand new role, right, with new Chevron Energies or Chevron New Energies. Offsets and emerging is your focus. Welcome.
Thank you.
Down the rabbit hole. Now, what are you experiencing around the challenges with respect to having to meet your customers' decarbonization needs, but also in a reasonable time frame, right?
Yep.
Already.
Great question. So I think Bill and John have already touched on scale, but I think it's really important to think about the size of the problem that needs to be addressed. So the most recent year we have full data for, 2021, was the highest year ever of global emissions, right? And it was at 53 gigatons in just 2021. And then you look at, okay, what are the solutions going to look like? And we firmly believe that high integrity offsets are going to play a critical role as a solution. But you look at the highest year of issuance of the offsets markets, and you're at 380 million tons in the same year. And unfortunately, last year, that dropped to 325 million tons. So that is, I did the math this morning, it is 0.7% of the global emissions is what is being issued every year in voluntary carbon credits. And so they're going to be a critical part of it. We believe that working together with all of these different groups who bring different aspects to it, we can help to accelerate that market. But where I think we really need to get to the discussion is moving away from the or of, is it going to be avoidance or removal? Is it going to be credits or CCUS? And really adopting a mindset of and. And so as we stood up with Chevron New Energies and where the kind of premise of that came from is we had global ambitions in order to meet our aspirations of net zero in 2050. And both the board and the executive level with kind of leaving that up to individual businesses, we're not comfortable with our rate of progress towards achieving that. And there was an acknowledgement of, if we're going to achieve what we need to achieve as an industry ourselves and also be a solution provider for other hard-to-abate sectors, we need to put people behind this, dedicated capital behind this, and some key focus areas where we can utilize our assets, our customers, our capabilities, and actually be a real change maker in this space. And so we stood up Chevron New Energies. There's a focus on carbon capture, utilization, and storage. The utilization ties back to your conversation around concrete, right? Where, how can we utilize that, or long-term sequestration? Hydrogen, which can be a real game changer both for heavy-duty vehicles, but also industry as a potential fuel. So how can we utilize our expertise in producing hydrogen to now do it in a far lower carbon-intensive way and actually bring it into further industries? And then the area of the business that I get to focus on, which is offsets, and then emerging technologies of what's that next generation of low carbon energy going to be, and how are we going to be able to bring it to commercialization and scale in order to be able to compete in the energy complex that we already have today. And where I think that's really important is, again, you come back to the size of this problem. We recognize as a company, we need to continue to provide reliable and affordable, and that was emphasized in the last year of why that's important, but also ever cleaner energy. And there's a lot of sectors similar to ours where we're going to have to lower the carbon intensity of our operations, we're going to have to lower the carbon intensity of our products, but it will come to a point where it'll either be technically infeasible or financially infeasible for the customer to be able to internally abate. And that's where carbon markets are going to play a critical role. They also provide, and through work like Xpansiv is doing, a critical opportunity to be able to create an investment vehicle, right? The current investment in total kind of climate finance is at about $600 billion. But the expectation is that needs to grow to $4 trillion a year by 2030. Carbon markets provide another means by which to create those investment vehicles that will allow, and it's an and, abatement to occur internally in these hard-to-abate sectors, but also investment in nature-based or engineering solutions that will ultimately drive down towards net zero.
Well said, Barbara. Thank you. And yeah, it's actually a fascinating role that you're playing right now, and I'm sure you're seeing a lot. And just to be clear, the investments that have currently been made, right? It is a lot in the U.S., right? Forestry.
Yep. We did an early partnership, and Bill mentioned that earlier with ClimeCo. We've expanded that to beyond the initial investment. We're looking for opportunities to grow it further, but also looking at cookstove projects, IFM, soil regeneration. And again, it's the value you bring as a company like Chevron is we have a global footprint. So we've early focused in North America where we're based for new energies, but we have offices in Singapore, in California, in Texas, and we are looking at a global footprint of solutions.
And I'll come back then and to talk actually just about the broader partnerships and the value chain and everything. Carbon neutral products and all these other good things that we have in so little time. But Keegan, so we hadn't met until now, which is wild, but then it made a bit more sense. You were Clear Sky for many, many years, CEO, and then that was acquired by South Pole in recent years. Global Director, Nature-Based Solutions. A lot of your history has been really working on the ground with forest communities, right, and developing countries, really reduced emissions, deforestation, degradation, the REDD+ stuff.
Right.
And so we had talked just briefly about the regulatory uncertainty. And it comes up, and it always comes up, and it's always the tough one, right? The stroke of pen risk. We're at the mercy, like it or not, of policy and government. And sometimes that shifts, right?
Absolutely.
With little to no respect with regard to the private sector involvement, right? Let alone the actual reductions. So let's talk regulatory uncertainty for a bit. Again, from your experiences in these developing countries, primarily with the forest communities.
Certainly. Thank you so much, Katie and IETA and the NACW community. It's awesome to see such a huge, standing room only audience crowd at a carbon conference. It is, I'm going to start with the weird thing that happened last night where I encountered Neil Cohen. Across a room, our eyes met, and we met over, of course, cocktails. But Neil and I We sold our first carbon credit to Neil at the NatSource Environmental Action Desk in 1998. And he's still here and I'm still here, and I don't know if that means strength or we're stuck in a rut. But what I can say is that we've at least persevered such that we have development concepts that are creative, we have infrastructure, we have investment desire in a marketplace that really was an experiment. Like if you think about the fact that we found a market solution that has no boundaries to solve an environmental problem with a commodity that you can't touch, taste, feel, see, and with that as our baseline, we're now at a spot where we're talking about what's the best public-private partnership legal construct for us to engage, to invest trillions or billions of dollars in a country to achieve mitigation targets. If we look at what we're doing here from a sort of historical perspective, it's crazy what we've done in 20 years, 25 years. It's truly awesome. So I want us to celebrate the original gangsters and all the new blood that's in this room, because we're not going to move it over the finish line of a 1.5 degree world without scale. We've tinkered around the edges. Less than 1% of the need is what we're working on now, and we think we're big. We're growing, you guys are growing. One of the biggest challenges in this marketplace is there's not enough human capital. There's just not enough of you for us to hire to do the work. So that's sort of like a quiet, unspoken reality is we're all trading people, but instead we need to be producing them. That's a university issue that I think we're gonna work on, but it's too slow. Regulatory issues. So my experience and South Pole's experience is global. We work all over the world. We are currently facing the greatest opportunity and the greatest source of chaos in this market, which is Article 6 compliance and jurisdictional approaches specifically to nature-based solutions work. Article 6, we're never gonna get to a 1.5 degree world without governments. We're just not. As a business-to-business market, nobody wants to work with governments. Right? That's just been, they're complicated, they're messy, there are things they do slowly. It's not an environment that most of the voluntary carbon market has embraced. And I think that was on purpose. I think we went about trying to build all the technical methods, the trading, the platforms. But right now, we're in this environment where countries are the key stakeholders. Compliance markets are the future, for better or worse. So we're gonna dive in and try to create some of those compliance governmental models with some select countries so that we don't end up where we are right now, which is Indonesia shuts down, Zambia nationalizes the voluntary market credits, Honduras puts a pause on all trading. Other countries are way more business proactive. They're pushing the voluntary carbon market and adopting as law voluntary certification standards. The environment of investing and, frankly, mining and energy companies are the ones who have really promoted the entire PPP model. Yeah. You guys are the ones with all the skill and expertise. Carbon market project developers, that's not our bailiwick. But we want to channel through market infrastructure processes and legal and contractual mechanisms. This is all stuff. I'm a tree guy, right? I'm a forester. But these are all the things that the market needs. And we're all working on different pieces of it. The challenge, to get back to the question, is every country under Article 6 is building their own laws, their own regulations, their own policies, and their own expectations of what a market in their country means. Indonesia's new law actually takes a 35% cut of whatever's sold. That kills a VCM project from any financial viability. The neighbors in Indonesia's world, in Southeast Asia, looked at Indonesia and said, oh, that's not going to work. We're never going to get any foreign investment in our natural resource management. Let's do a different model. But much like the dirty aughts of the carbon market, when there was there must have been 45 carbon certification standards. It took 4 years to converge to 3 or 4 that the buyers and the developers felt were science-based. Right now, we're looking at that same proliferation of choices and options, and it's country by country. It's going to take a couple years to converge on, hopefully 3 models that governments around the world can choose, say, that looks good for me. And, oh, by the way, it looks good for big investments. So investment funds will invest capital in the development of projects and will use blockchain and all kinds of weird technology to do MRV. But the process of working with governments, I mean, what are we, 28 years along on the UN framework? It's slow, and it's not a time to be slow. Now is the time for all the climate warriors to stand up and fight. It's now or never, right? All of us love our theoretical or maybe some real grandchildren, but now's the moment that we think about the future. We don't have time, but we just created a situation that's slow. That's my fear.
I want to
That's
be
the
on
biggest
stage
one.
with you more often. That's a call to arms. That was, I mean, inspiring. I'm being serious, and it is. It's important. And I know exactly what you mean, where people are like, woo, this is so Wild Westy. It's like, you don't know Wild West, like, back in the day. But I see where you're headed with, hey, if we don't try to curb this or make sure that some of these governments can be aligned or in these clubs, and there's some harmonization, including the infrastructure they're using and the MRB piece, and then we could get into that world too, where like it's Wild Westy 2.0, right?
It feels like the moment requires all of us stakeholders to band together a bit. We're used to competing, right? Especially us. We're direct competitors in the world. We're symbiotic predators, I would say. But the idea here is that we need to work together to create a couple of groups that look like, I don't know, a strategy for least developed countries, a strategy for mid economies, a strategy for developed countries, Europe and North America, and create financial investment, legal policy structures, and infrastructure and methodologies that we can use at jurisdictional scales. And we need to collaborate, which is something that, we sort of, at the moment, we're formed in a circular firing squad, right? We've got ratings agencies, media attacks, people that don't like markets, and we're in a defensive posture at the moment when we should be on offense.
Right on. Okay, so so now we're getting to the gnarly bit, and that was a good bridge. Okay, Bill, a couple of things I'm going to throw at you, okay? First, the issue around baselines and grappling with baselines. How are you viewing the debate? How are you approaching it? Please share with the group. And then I'm going to ask you another question on products.
Well, I'm really glad you sat me next to Keegan. Actually, what's
symbiotic predator.
Yeah, symbiotic.
Symbiotic.
Actually, what's really unique about all of us is that we've all done business together. Actually, so we're all members of IETA. Xpansiv is a customer, Chevron's a customer, and actually South Pole's a customer of ClimeCo's. And so it's very symbiotic here. And Keegan just really actually depressed me because one of the things that we're doing is we're expanding heavily into the APAC region, and I have investments in Indonesia, and I thought the haircut was only 30%. Now he just said 35%, so I'm negatively impacted right now. So, but somebody had asked me as well, what do you think about the Paris Agreement and the ER's corresponding adjustments? And to your point, we say we try to avoid them every time we can. But as we're expanding globally, we can't. So, the question about baselines is so important. And I talked about some of our project types that we invest in, and one of the certainties that I think the market comes to with respect to avoidance projects is the real live baseline that we have. We have very techy Fourier transform infrared analyzers measuring concentrations of greenhouse gases before and after control technologies. I have live dashboards that show on a minute-by-minute basis how much we're generating, how many credits we're creating. There doesn't get any more real than that. So there are projects that have baselines that are so transparent and the reductions are so permanent that it's a classification by itself. Mm-hmm. It doesn't have necessarily some of the other ecological benefits associated with removal projects. But there's a quadrant of buyers that just loves that baseline. Yeah. They love to see it. They love the fact that our analyzers are calibrated every hour. It doesn't get any cleaner than that. I think when we start to look at afforestation projects and reforestation projects, those are a little easier too, because the baseline is that there are no forests there. Our biggest challenge with forestry projects like that is. We're investing in Louisiana. Guess what? There's something called hurricanes. and there's a path that goes into Louisiana. That last year there was no named storms into the coast. That was a really great thing for us because our plantings have time to mature and the root structures take. So that's one of our issues. But I think on the afforestation, it's cleaner on our technology, it's real time. So we don't deal with some of the other issues around baseline with respect to, forecasting, a likelihood of an event occurring, with respect to a deforestation, et cetera. But, as a scientist, I would just say, I'm a meteorologist with a lot of focus in climatology with an MBA because I couldn't forecast the weather. But I can say that I believe in science. So if science shows that technology evolves with AI technology, with remote sensing, I think it's imperative that we look at the science and we make adjustments to methodologies when appropriate.
So I have to ask, feel free to chime in if you like, but Scope 3.
Yep.
Scope 3, carbon neutral products, and there is a lot of confusion out there, lack of clarity, concern, right?
Yeah.
And so, how ClimeCo's approaching it, if Chevron wants to chime in, but how are you seeing it? Because it is very real, this discussion that's happening right now. And again, there's lack of guidance or overlapping guidance or confusion, so what's going on?
Yeah, we just had an opportunity, all of us did, to comment on the GHG protocol.
Yes.
So hopefully everybody participated in that. ClimeCo did. I think we released a blog on our comments, but it's really important that we're commenting to keep up with the market to make sure that the protocol is looking at this correctly. A lot of our projects are reducing emissions at facilities that are creating a product, whether or not it's cement, whether or not it's nylon 6,6, whether or not it's fertilizer. When we look at the offset market, we always think of I think of an offset as a derivative, right? You're selling the derivative separate from your product. We always believe, in my mind, that one day that derivative shouldn't exist anymore because the customer's willingness to pay for that bundled product, that lower carbon intensive product, should be there. So I always look at the offset market as a bridge to where we want to go. So one of the things that we're focused on is working with our customers to find out what's their customers' willingness to pay. We're going out into the green cement arena and saying, if we can give you an environmental product declaration, which is like a nutritional label of your product on what your carbon intensity is, are you willing to pay a premium for that? And is that premium greater than the product and the derivative sold separately? So is bundling it, does that make sense? And what I really love about Scope 3 is that a lot of our clients, I think it's going to open up an opportunity for all of us because we may create offsets as a derivative and it may stay in that world, but I want to quickly wrap that around the product. So if I find that the product is going to a client with an SBT, they've got a target, they have a Scope 3 reduction target, and then I realize, well, wait a second, we can align ourselves here. I don't need to sell the derivative separately. I want to sell you an environmental product declaration, a digitized product that's going to go with the purchase that you can count towards your Scope 3. And when you're counting that towards your Scope 3, now all of a sudden, you're actually buying an offset, but we just inset it. Yeah. So, it's a different buyer, it's a different product, and we're creating API structures right now to digitize that offset and wrap it around a product. And I'm hoping that's really where we go. So I'm really excited about that, but I say to all of our clients, keep it as a derivative, keep it separate, quantify it, do an offset project, because until we really verify what the customer is willing to pay is, I think right now the benefit that we're seeing is that we're not always seeing their willingness to pay an equivalent price of the product plus the offset, but it's evolving quickly.
So much to say, so little time. Barbara, though, riffing off of that, and just again, value chain, the Scope 3 piece, right? And you working with partners and thinking of, products that are being offered or could be offered, again, where there's potentially something wrapped in, offset-wise, right? How are you dealing with it, grappling with it?
Yeah, Chevron's approach on Scope 3 has been a little bit different than some of our peers. And so what's interesting when you're an oil and gas company is every product that you make that is one of your Scope 3 emissions is somebody else's Scope 1, right? So where you ultimately want to get to is that everyone is trying to tackle Scope 1, and then that kind of by default takes care of what is our Scope 3. But that's not a long-term solution to assume that everyone else is going to do the right thing. Where we've been focused on it is how do we lower the carbon intensity of our production, right? So how do we get to be the top producer of oil products? And right now, for instance, Permian is within the top 10% lowest carbon intensity oil produced in the globe, right? So how do we focus our portfolio to really bring down that carbon intensity? Likewise, with the products that we make and refine, how do we shift to an ever lower carbon intensity? And so they're the measures that we have in place. It's what we're all held accountable to at an executive level of what are we doing in terms of that carbon intensity. But there's also, as the point was made, a bridging strategy of where you get there and when can we offer. So let's look at aviation fuel. SAF offers huge potential in the future, but current production rates are incredibly small. Only about 3% of global aviation fuel is SAF right now, or sustainable aviation fuel. And if you look towards the next decade, where CORSIA has the kind of 10% requirement, every scenario that you look at that is publicly produced says we're only going to get to about 6 or 7%. And this is where offsets can play a critical role. So when we work with our large aviation partners, can we offer an offset paired product while we're undergoing the investment in our West Coast refineries to produce SAF? In the interim, can we offer a offset paired aviation fuel to help bridge that gap? Likewise, we've done that with LNG. So if you look at North Asia, major customers in Japan, huge customers of our LNG products that come out of Australia, a long-term solution that Japan is looking at initially as a transference from coal is to go to ammonia. That's where our hydrogen business comes in, right? You produce hydrogen, transport it as ammonia, and help them to reduce their emissions from coal-fired plants. The next step, though, is their LNG-fired plants, and we've sold offset-paired LNG cargoes as that interim solution as you ultimately move towards the cleanest alternative. And that's where I come back to is the and world. We need to be looking at these things. What are bridging solutions? What are long-term solutions? And again, the size and scale of these markets, and coming back to having to continue to provide affordable and reliable energy, because you see what happens when that doesn't happen, is how do we look at this and how do we present these as paired solutions? And that's where the value of
just across carbon, across power, many things. So, your discussions with the CFTC, right, or IOSCO, and how compliance kind of in the bag or maybe like clear, but then the voluntary market is being approached right now, and like any areas of consternation, right, or how you are communicating to these financial regulators.
Yeah, thank you. It's actually quite interesting. First off, I would say the voluntary market and the compliance market clearly converge at some point. So that's one thing we didn't quite touch on, but if you look at the way these markets are setting up, you'll see allowances across various countries, and the actual connecting tissue is the offsets, because they're the only thing that's truly fungible across. You're not likely, and I've been in the space for a very long time, as you said, to see the EU ETS be used, say, in Japan. It's just not, what you'll see, though, is the fiber will be the offset. So there's a unique piece there. But specifically in the VCM, where there's a lot of conversation about the market developing structure, making sure that there's price transparency, things like that, the CFTC here in the US has been quite active. Expressed a lot of interest in the markets. We are active at Xpansiv with that. Actually personally sit on the CFTC's Energy and Environmental Market Advisory Committee on the teams there. And so I've worked with them. They're very thoughtful about it, but they have a limit that's inside the Exchange Act. So it's only as far as they can go in that process, and they regulate. In our case, because we operate the largest market, and that creates standardized contracts, the CME Group, which is the largest exchange company in the world, has developed the futures contract on it. The CFTC fully regulates that. And so by definition, the CFTC regulates the transactions that happen there. With us, we are the settlement engine for the for the CME futures contracts. So the GEO and NGO suite, when it goes to delivery through us. When they set the marks or the daily settles, it's off of our prices, and at the end of the settlement, the actual final settlement is off of the settlement. So by definition, the CFTC has reach into the market through that because they have authority there. So these are regulated that way. There's been a fair bit of discussion about trying to regulate the offsets themselves or the registries. I think that's sort of backed away at that level because there's a lot of jurisdictional issues. But there are certainly discussions that people have had around that. IOSCO is an interesting one. Not sure if people are familiar with IOSCO, but they have an international scope, and I think that where they would be really well served for the market is to really point towards the buyer. Certainty for what a buyer can buy is how it can be reported back out. Because at the end of the day, I think one of the problems that's happened, I should say, let me stop for a second. The market's definitely had some turmoil this last half of the year, but it's nothing like it was 3 years ago. From an exchange perspective, there were 10 million tons traded on exchange globally in 2019. On our exchange this year and last year, averaging over 120 million tons. The notional value in the market went from $7 million on exchange in 2019 to almost $1 trillion last year. So we're fundamentally different. The infrastructure is building out, futures and all these other components. But there's definitely need for buyers to feel comfortable about what they're going to buy is going to be okay. And they're not going to wake up and have be attacked for trying to do the right thing. Which is I think that's where IOSCO and other groups like that can really help.
A plug for, the Xpansiv comments on IOSCO. And also I see my colleague Amy Zell, Voluntary Carbon Market Technical Director, worked on IETA's comments to IOSCO and also CFTC. And I know that, Craig, you're having a great fireside chat with the chair of CFTC soon, in Anaheim. So watch it. So let's go. Show of hands if you have questions, so I can just get a feel for the room. 1, 2. Okay, so we'll have 2 questions, but so as our colleague with the mic can go to Keegan, yes. Are you ready for this question? My question.
Yes.
Media.
Whatever it is.
It's media.
Okay.
It's media.
Yep.
And that, I think, for many of us who are in the trenches in these markets, right, it's coming pretty fast and furious right now. Some valid, some not as valid, right? The media stories that don't look so kindly on markets for a variety of reasons. So kind of what you're seeing, what could be done, what should be ignored, what is the advice to the market and the folks in the room about media?
Advice to the folks in the room about media. Right now,
and comms and the narrative.
I would venture to say, as the nature-based solutions sort of project origination person, this falls squarely on my conscience and my head. Most of the scrutiny has been about red projects as of late. It's also about baseline issues with the more difficult activities. I think one of the things that we as carbon market participants and stakeholders have to recognize is we took a weird experiment and built a market, and the sort of alphabet soup of the regulatory discourse. I mean, I had a show of hands of who understood what he was talking about, right? That's the level of evolution and specificity that we are now at, which is like pretending to be a real commodity market. We're close, right? What'd you say, a trillion? Right? And the demand is how many trillions?
53 gigatons.
53 gigatons. So again, we're like less than 1% of solving the problem we want to solve. And we've got there now, we're building infrastructure. The important thing about the media from my point of view is we all have made tons of mistakes in this experiment of the last 2.5 decades. But that was what it was for. That's what the building evolutionary process is supposed to be. You're supposed to try something, fix it, learn, make it better, try it again. Oh, we messed that up too. Let's use new technology and new techniques, better science, fix it, try it again. The media scrutiny that NBS project specifically and globally, this marketplace in general, is focused on trying to find ways that unique stories don't include context of a learning and improving marketplace, which is the fundamental nature of an incipient market. Try it, it's broken, fix it, try it again. And I think the buyers of all of our credits, for the most part, have recognized historically that this is trying to solve a problem that's bigger than us, and we're using tools and techniques and processes that are in development. Now, we're getting to the point now where institutional investment, financial actors, standardized approaches, regulators in marketplaces, we're still looking for some standardized contracts and relationships with stakeholders. But the media scrutiny, specifically on cherry-picking baselines, using reference regions that don't work, using a methodology where we target, for example, we created a baseline for a project in Zimbabwe based on 3 or 4 years of data where a country had nationalized farming, and there were massive subsidies in fertilizer and ag inputs, and everybody went into the bush, cut trees down, and started planting, started farming. 3 years later, that president's out of office, there's no ag support, and everybody stopped. So those 3 years, our baseline was crazy, because everybody was moving into agriculture, and the way the methodology and the certification worked was you went back to revisit 10 years later. We had a baseline of massive deforestation. 10 years later, we were like, oh, that didn't happen. So what happened? Vera changed it from 10 years to 6. I venture to say it'll be every verification period soon, where we revalidate baselines. And at South Pole, we revalidate baselines for red projects now with every verification event because we saw what happened. You can't leave a model static for 10 years in the real world. That's crazy. We tried it, we did it, we learned, we made mistakes, we're fixing it. I would say the best stories about the carbon market aren't about us. The best stories are about the people on the ground. The best stories are, the people that own a cement factory and are looking to try to find a way to improve. The stories about how the carbon market is catalyzing investment in humans to make changes in what they do, and everybody hates to change, right? Nobody in this room wants to change their toothpaste, no less change how you farm. So it's not an easy thing, but the media scrutiny, I think to some extent we have to feel more confident.
Right.
We are a very defensive posture marketplace. Somebody attacks us, the buyers of the credits come and say, is that really happening? And then we say, oh my God, no, we were trying to fix it. We didn't mean it. It just went bad and it wasn't our fault. We complied with the rules. We need to say, no. We're doing good work here. We're trying to save the planet. And what your impression of this piece isn't going to solve it. So we need to be able to recognize when the media comes and we give interviews and they don't use any of your information, which is happening, or they ignore your perspective for their story, which happens all the time. We need to be able to say, send me written questions and I'll reply. But I'm not going to sit down with you unless you're legitimately going to take my perspective into account. And we also need to be able to say, we're a trillion, we're regulated, leave us be for a little while, let us figure it out. So we need to be a little more bold and self-assured, and one of the ways we can do that from media point of view is all of us need, I go back to that, we need to be one. We need to unify a bit, right? We need the power of Chevron to influence its clients to not pester every project that comes out in every Guardian article, right? That can't be how we move forward. It's the most inefficient way for us to spend really important time. The time is now, and we shouldn't waste it on endlessly being defensive. We need to be proactive and creative. And again, there's a limited human capital in this marketplace, and we shouldn't be spending it on endlessly being defensive.
But we've all spent all this time in rooms like this talking to each other, right? We need to, and IETA does fantastic work, and a number of people do out here, but I think as an organization, or as an industry rather, we need to speak outside of this room and tell the story that you just told. And the VCM is, by its nature, meant to be an iterative process. It's trying to get better. There's a whole series of protocols that would have never existed if it just stuck with some kind of government-driven process that was just mandated. In fact, all the activity, in my opinion, when you start to mandate certain things is, how do I get out of that? versus putting how do I innovate and drive in that. And that's the benefit of the VCM. So we need to speak as a group and as we will never have one voice, but we need to speak beyond these rooms. We need to talk to the rest of the world.
And I wanted a quick comment on that maybe, because last night I was with one of my heroes in this space, Dee Lawrence, and I was talking to Dee about a video series that Cool Effect is making, because we all realize that we need to look outward, we need to go on the offense and educate. And we have a 4-part educational series right now that's going out to the market. So what can we all do together to educate? I was talking to Dee last night about, Dee's going to support in a review our educational series and look at ways that we can integrate it with the video series. But how are we together educating? We can't sit back and play defense. We need to go out there and educate this market. And that's incumbent upon us. Yeah. We speak at the board level a lot about that. What are we going to do differently now to educate? We're educators. This is our market. So I agree thoroughly.
Barbara, I'll add one final plug, and this one is going to sound incredibly self-serving, but I'm speaking for beyond just oil and gas. There has been a trend towards not wanting oil and gas to be part of these markets. We've seen different parts where there's new systems that are coming in place. Oil and gas are specifically excluded. And I think if you look broadly at kind of heavy industry, of which energy is part of it, that 53 gigatons I spoke about earlier, we make up about 35-40% in any given year of those numbers. And you start to add in transportation, right, depending on where you want to draw those boundaries. If we don't allow some of the people who are a huge part of the problem to be a part of the solution, it's going to be incredibly difficult to ever be able to achieve the size and scale that needs to be achieved. And I think that's where there's been very vocal voices from tech industry that have easier solutions around going with renewable power, et cetera, around decarbonization than pulp and paper, cement, steel, power, oil and gas, vital industries that allow daily life to continue in a way that it does, that need to do so in a lower carbon way. But if we allow there to be a continued trend of trying to exclude those voices from the conversation, there's a real risk that the capital dollars won't be there, and also you won't allow part of the problem to be part of the solution.
Yeah. See, I left this
so
to the end. Oh, yeah, it's a lot on media, and I knew there would be. I also did promise we'd have one or two. If you still have the questions and the mic, and this gentleman right there.
More and more questions.
And please make it a crisp question, if you don't mind.
Chris.
Yes, Octavio Lopez from Nación Verde. I'm a developer from Mexico. And how do you think about most of these projects that we started doing in Mexico? They have sometimes they have been predatory, and I've seen some that are not nice for the local communities. But in the time when they're really good for the communities and you give a good percentage to them, they actually help a lot. And the people nearby also say, oh, this is a good project, so I want to jump into that. But that part is not being taken too much here. I hear a lot about the banking part, and it's like $1 trillion. But into the communities, it's not reflecting that much. And the way we see it is like a balance for the communities to be able to sustain their land. So that's what we're thinking, that it has to be a balance also from the money that is created on the other side that could flow to the other part. And that's part of the protection. If you have these projects, I think the people that impact the most has the opportunity to help the most. So it has to be also another way, not just, maybe on the other part, that could be like a balance, because sometimes it feels like a neo-colonialism, because companies will come and get the money. So how do you find the balance and fair so it's self-sustaining, because the people on the land will say, yeah, this is a great project, so it's good for the communities, and also it's a good business. Mm-hmm. So just to hear those voices, it's important, it's good. There's a market, so there will be no carbon. And also the possibility of including some other things, because the way we see it is the people, the animals, and the land. And also the people, what they need is money. Not too much, but as long so they can keep the land. So
Thank you.
If we can give that biodiversity, it will be good. Thank you.
Completely appreciate, total respect. And just again, looking at Carr, giving me the evil glare that we have I'm just kidding. Great question. I'm going to give it to, Keegan and or Bill to take this away. Again, just keeping tight on time for the response.
She says. My crisp answer to you is the current thinking of, and it's a bit nebulous, but let's use it, high quality carbon. With respect to community and indigenous-oriented projects, South Pole, we will no longer engage in those projects without embedding people in those communities for the long term of the project life. We also will not engage in those projects without a transparent benefit distribution system in Mexico. That includes the voting of all of the ejido boards and the votings of their acceptance of that, and we will revisit that benefit distribution model at periods during the life of project. So you're not fixed into something, it's a flow, right? If the market goes up, everybody should go up, not just some fixed percentage or fixed price that you're gonna get as a project owner in an ejido in Mexico. So the awareness that the market or market participants negotiated deals and contractual mechanisms that were fixed in time while a market moves, that era's over from our point of view. We can't build projects that way and avoid the reputational risks of getting crushed because it's unfair, it's predatory, as you allude to. So we will only build those in association with partners in an open and transparent way that will allow sharing of the benefit distribution through time. That's the way that we can incorporate better relationships to communities. And you're right, they're the ones doing all the work. They should get the vast majority of the money. And if they do, the likelihood that the next generation of that community or society will embrace this change is much more probable.
Good answer. Did you want to add anything?
Crisp.
Crisp. Word of the day, crisp.
Yep.
And symbiotic predators. So I just want to thank All-Star panel, right? It went by in a flash. We jammed a lot in. Thank you so much, Bill, Keegan, Barbara, John. Thank you. Thank you again to Carr for bringing us all together.
Yeah.
Enjoy the next session.
Thanks.